Hi guys, it's Ina. This week we have only 4 trading days, and in most cases, short trading week means flat trading week. It's not 100% rule, but it's what happens in most cases. So with that in mind, if you like to trade based on fundamental analysis, I have already published detailed overview of what is happening in the world, in markets, what economic data to watch this coming week, and a lot more stuff regarding fundamental analysis. It's available on my website and you can check it out. And now I want to look into multiple markets to find the best setup in the market to trade this coming week. I didn't check it yet, so I will do it with you. So let's get started with S&P 500. I know that many of you like to trade this market. So it's actually a weekly chart, and I have to move to daily chart. Here we go. And I think that we start with advanced decline line. I know that some try to think it's an old school, and it is an old school, but it's still working, so it's still worth to pay attention to it. And here we can see bearish divergence between the price and advanced decline line. Well, it doesn't mean you have to short right away, but we want to check multiple tools and to see if anything can confirm this signal. And the next tool I would like to use is insider accumulation. Here we go. And insider accumulation has also bearish divergence. You can see here the price is higher than it was here, but the insider accumulation is lower than it was here. So in any case, we have 2 bearish divergence, and let's check cycles. Cycles is another very useful tool for S&P 500 traders. Okay, here it is. And based on cycles, we can expect some weakness in this market as well. I want to pay attention that cycles is just a timing tool. It doesn't have any relationship to amplitude or strength of coming move. It just indicates that near current date we can expect some strength or some weakness in the market. So this week we can expect some weakness, but it doesn't mean you have to short it right now. If we will get a swing failure near this resistance, then we can consider some shorts. But I want to pay attention that economy is very strong, and all the key economic indicators and economic data show a positive dynamic. In other words, there is no reason to worry about next recession or to worry about some coming crisis or something like that. What we are talking about here is just a normal pullback, and I don't think it will be even a deep one. Maybe we will see a retest of this massive resistance, which is around 42.50, and likely it will offer some support. But it's just a general idea, and first we have to see a swing failure before taking shorts in S&P 500. So this is it based on these tools, and I think we can check also ultimate oscillator if it gives any hints regarding S&P 500 for this week. Here we go, ultimate oscillator. Oh, well, actually nothing. Maybe on a weekly chart. No, on a weekly chart as well. But you see what is interesting about weekly cycles, that overall we can expect a significant rally about to start in this market. That's very interesting because our weekly cycles have more power than our daily cycles. So keep that in mind. Even if we see some swing failure on daily chart, likely it will be very, very short-lived. So if you will try to play on a short side, just use strict stop loss and be realistic about your target. Don't establish too big targets because the market, as I said, the market is strong and there is no reason to expect for something terrible to happen in this market. At least as for now. Certainly the fundamental conditions can change and so on. But at the moment, overall, we are in a bullish market, but when it comes to short-term trading, we can expect some weakness in coming days. But anyway, the trend is bullish, as I said. So now let's check, I think, German index, because personally I like to trade German index more. It's more technical, I must say. Okay, here we go. It's a daily. Let's start with the weekly chart. And a few words again about S&P 500. The resistance, the next major resistance is around 4400. So keep that in mind when you plan your trades in S&P 500. So let's get back to German index and similar weekly cycles about to go to the upside. And by the way, insider accumulation points the same direction in stock market in American and in German as well. And the daily cycle is somewhat choppy, so we can see some consolidation or maybe a little bit of the pullback here. Also, we can check here advanced decline line as well. Let me delete this one, and here you can see that advanced decline line is actually stronger in a German index than in American, and it's a bit surprising because in most cases American stock market is the way stronger than the others like German and so on. So anyway, you can see that the price is the way lower than it was here, but advanced decline line has almost reached previous levels, so it's quite bullish. And this one is neutral, so we can just remove it, we don't need it. And now let's check insider accumulation. Oops, insider accumulation is weak and quite significantly weak, so it's a mixed setup. I can double check with unbalanced volume. Okay, it didn't show for some reason. Let me try again. That's strange, because it can't upload the data. Okay, let it live. I'll have to contact the software developer and ask what is happening with unbalanced volume. So, as I said, I like to trade German index more, but at the moment the setup is better in S&P 500 than in German index. So I will likely watch S&P 500 to trade based on 4-hour chart, because daily is a bit difficult to trade right now. So the next market, what we can check here is American dollar. We have a perfect trend line going down here. So technically breaking above qualified break above this trend line can be a signal to go long if there is setup for that. So let's check setups. Now we are watching our weekly chart and we want to check commercials index first of all, which is neutral at the moment. And the next tool is net positions. And net positions, it's actually neutral, but I want to pay attention to retail positions. The most interesting category in commitment of Treasury reports, it's certainly commercials. But they are neutral now, and the similar big funds, but retailers are very bullish in this market, and it may be very negative for American dollar. Let's check the next few indicators. I have some idea that American dollar will build a wide range of consolidation on weekly chart, somewhere from these lows around 89.50 or so, and up to this resistance or even upper resistance. But let's check another tools. Sentiment index, it's neutral, nothing to do here, okay. And now weekly cycles. What we have here? We have potential buy point coming in a few weeks, in a week or two, but there is no other confirmations like commitment of trade report, intermarket forecast, and so on. So it's a kind of risky to trust cycles in that case. Certainly we have to watch this trend line, and if it will offer some qualified breakout, maybe we can consider some longs, but I don't trust this move, and first of all because of retail positions. You know that retailers in most cases are wrong, so keep that in mind, and maybe we'll see some Wyckoff accumulation here. Maybe it's the start of Wyckoff accumulation, but it's too early to say. We need the way more price action. So with that in mind, let's go to daily chart. Okay, we'll delete this trend line. And based on daily chart, here we had a perfect entry based on cycles right here, and it rallied the next few days, and the perfect top here and some decline. And what's next? In a few sessions, it might take a week or two, you should see another attempt to rally based on the cycles. But once again, all the other tools are so mixed, so I don't trust it that much. Let me check ultimate oscillator. Maybe we have some divergence there. It's working quite well. I mean, ultimate oscillator for American dollar, so you can trust that one. No, there is no divergence. You can see it's actually just followed the price. Here we had divergence. You see that price was going down while ultimate oscillator built an uptrend, and we had a trend line going down here and then breakout above this trend line followed by the rally. So actually ultimate oscillator did its work here during this period, but this move I believe have already finished, or at least it's too risky to engage into this move right now. Okay, the next one is sugar, and if you like to trade sugar, I have actually shared my detailed research of supply and demand and other factors, and I shared my forecast for the next 4 years for sugar on my blog a few months ago, so you can check it out. And all the explanations are given there why I expect that move to happen in the next 4 years. But let's come back to our chart and more short-term setups. And I think that it's worth to move to a weekly chart directly. I don't like to use a daily chart for analysis of sugar. I use it only to find some entry point if weekly chart generates signal. So let's check cycles. Cycles are somewhat negative, very, very short term, like for the next week or maybe 2. But as I said, it's not the reason to go short. We need something else to confirm this guessing, because at the moment it's just a guessing. So here we go, our commercial index, which is neutral at the moment. And net positions. Net positions are also neutral, and I want to pay your attention to the importance of commitment of trader. If we see some strong setup and commitment of trader and cycles given the same signals as well as other tool, we can expect a really big significant move and can get significant returns as well in the market. But if setup is somewhat mixed, that means that it's better to stay away of this market, or you can take the risk and trust few tools, only 1 or 2 tools, and enter the market in smaller time frames like 4 hours, for example. But in that case, you have to be realistic about your targets. You can't expect the sugar to drop to, for example, I don't know, $11 or $10 without strong setup. It simply won't happen. We need a strong setup based on commitment of trader report, for example. So based on the cycles, we can expect some downside in this market, and the realistic target in that case will be somewhere between 17 and 1650, and this is it. There is no reason to expect this support to give out. Certainly the situation can change and we can get some stronger signal from our tools, but it will take time, so keep that in mind always. And now I want to check also insider accumulation for sugar, if there is anything interesting. Okay, here we go, our insider accumulation, and it's very weak. You can see it here. The price touched new highs last week, and the insider accumulation was the way lower than it was here during this period. So there is no accumulation in this market. So keep in mind, it's not a strong setup, but we have 2 tools giving the same signal. And that means if we will see a swing failure, a strongest swing failure with some significant volume in this market, then we want to wait for some bounce up, and the next rejection we can sell with a realistic target near this support. And this is it. Don't expect something more from this market. It's what can realistically happen. But first you have to see a significant swing rejection at these highs, and it's good if there will be significant volume as well. I can double check with, I can check this on daily chart if there is divergence based on insider accumulation as well. Here we go. Yeah, we have one. So certainly watch this market. You can see that potential weakness in this market comes a bit later. The first one is here. It's about in the coming few sessions, then some bounce up, and the next point to expect some weakness is somewhere in the middle of this month. So this is it about sugar, and I think we can move to next market for example, bonds. I had a trade in bonds and some of the managed accounts, and it played very well last week. But I decided to get out of this trade. I made it somewhat sooner than I should because I was out here and it rallied more, and certainly I could make the way more money, but anyway. Let's move to weekly chart. We have some kind of flag information here, see? And this is, it seems like bonds are flagging. And we have cycles that suggest some weakness in a week or two from now. So it's somewhat a bit too early to say what to expect here, but we can check what is happening on some other indicators. Okay. Well, it's somewhat neutral, this one. I can remove it. And let's check commitment of trader report. First, we're checking net positions now. Nothing interesting, it's neutral. Okay, let's move on and check commercials index. Commercials index is neutral as well. So I'm actually not ready to jump right now. Besides, insider accumulation is somewhat neutral. So with that in mind, I will likely add it to my watch list, but I'm not quite sure if I should trust cycles here because of absence of any other signals. And you know, I don't like to trade the markets when I have only cycles, and this is it. Well, it seems like I have a pattern of flag information and so on, but anyway. Let's see, I will be watching this market, but I'm not ready to say I am bearish here. Okay, and the next market. Oh, let's check gold. It's a weekly chart, so I will delete this for now, insider accumulation, because for gold I like to use insider accumulation on daily charts more. Okay, here we go, cycles. We can expect some more weakness followed by the rally in this market. But the rally is somewhere at the end of July. It's just based on cycles. It's not enough. Let's see commercials index. It's bullish. Commercials are bullish in this market. That might be interesting. Now we are checking net positions. Net positions are neutral, so we are removing it. Okay, let's move to daily chart. What we have here, some choppiness followed by potential weakness and buying opportunity, as well as on a weekly chart somewhere at the end of this month. But what we have from insider accumulation? I guess there is no accumulation. It's neutral, but given enough time, something like 2 weeks or so, we can see some signal actually from insider accumulation. And ultimate oscillator. Is neutral as well. But let me add one thing here, where it is. This is the volatility. We had a crossover. No, it's not. It's not a good signal. Well, we have some early signs of potential bullish setup in gold, but it's not formed yet. Keep that in mind. So we are just adding gold to our watch list, and we will check it next week, and maybe we will see some building of so-called course for the rally. But I'm not quite sure, but it's the market I want to watch for the coming few weeks, and maybe there will be good setup for entry in this market, but not sooner than that. Certainly you can use smaller time frames and find some interest there, but I'm not much of a day trader, no. Okay, and this is wheat. I like to trade wheat because when this market has a strong setup to rally or decline, it plays very well, like almost any other futures from agriculture sector. Okay, let's start with the weekly chart. I don't know what this line is about, so I will remove it. And let's start with cycles for it. Okay, we have cycles. Somewhat later we can expect some rally, if anything else can confirm this. By the way, for agriculture sector, I check also a seasonal indicator, which works not bad. I trust cycles more than seasonal indicator. Oh, sorry, it's not working on daily. I forgot, it's only for weekly chart. Anyway, here's our weekly chart. We have a bit more time to the downside based on the cycles, followed by the rally. And the seasonal is absolutely different. It's about to go to the downside. So let's check commitment of trader, and if it turns to be bearish, we can expect some decline in this market actually. Okay, net positions. Net positions are neutral. Well, there is no surprise, like I said at the beginning of this video. In most cases, when we have a short trading week, the market is flat, and it's likely confirming this idea. And this is our commercials index, and it's neutral as well. I am not ready to trade with. Maybe on a 4-hour chart, but let's see. It's trading just in the middle of trading range, of consolidation zone. So it's a not good range to engage into trades anyway. So likely I will skip these trades and look for something else. Okay, the next future. Well, let's have a look at Coffe. I didn't trade Coffe for a long time, to be honest. It's something like half a year ago I have last trade here, something like that. So, okay, what we have? Weekly cycles, about to turn to the upside. The most interesting part comes commercials index. Well, it seems like it's bearish, right? But in fact it's not, because we are not looking for this index to be in bearish or bullish territory. We want this index to form some next extreme levels, like for example it was here, you see, but at the moment it's not happening. Okay, the next one is net positions. I'm checking net positions and commercial index because sometimes they give different signals. One of them can be neutral and another can actually be bullish or bearish. No, it's not that case. They are both neutral, so we can delete those. And let's check market sentiment. It's not the first tool you have to use, I mean market sentiment, but it's something you want to keep an eye on. It's also almost neutral if it gets here. So it will mean that most of retailers and advisors are very bullish in this market, and in most cases we see the opposite direction in the market. Not always, but in most cases, something like 90–80% of the time, it's quite a good signal. Anyway, we are not there yet, so we can remove this indicator from here. And let's move to daily chart. Okay, so somewhat later, in 2 weeks from now or so, we can expect a rally or some strength. It's not actually, it has to be a rally. We can expect some strength. It will be more correct for me to say so than to expect a rally. So some strength in this market, but it's not enough, and besides we have a perfect swing failure here, so there is no sense to look for buy signals, it seems like. Okay, insider accumulation. There is no accumulation at all, so this market based on accumulation is just dead. Maybe it makes sense to wait for this moment, which will be, let me check, somewhere in the middle of this month, to look for rejection in the middle of this month and then consider some shorts. But I want to pay attention that there is no bearish setup based on commitment of trader report, which is one of the most important indicators for commodity traders. So keeping that in mind, we can't expect this market to drop to 120, for example. It simply won't happen. But if we will see some bounce to the upside and the next rejection somewhere near 170, 160, and then swing failure there, we can expect this market to drop to 150, 140, which is not that bad profit at all. But we have only, let's say, we have only 50% of our tools that indicate this move might happen. So keep that in mind. It's not that strong setup, but at least it's something. So watch Coffe to your watch list, and maybe we will get a signal here next week or so. We can check also ultimate oscillator. Well, actually, ultimate oscillator is neutral. So I think this is it about Coffe. Maybe there will be a trade, but I'm not quite sure. Okay, what else you can check here is soybean oil. Again, another flag information, and it looks like we can see another wave to the downside. It's on a daily chart, and on a daily chart we have few days, maybe something like a week more to go to the downside, and then we can expect some strength in the market followed by another decline. You can see it all on the cycles, and once again, cycles are just a timing tool. It doesn't have any relationship to strength of coming move. And if you see this line is big here, right? It doesn't mean that the rally has to be big or significant. It just can be a small bounce on a daily chart, something like actually like this, for example, one. And this is it. There is no relationship to strength or to the momentum. Just a timing tool. And if you see a small line like here, it doesn't mean the decline will be also that small. It may be small, it may be significant, like up to here, for example. So just timing tool, and we need something else. For example, insider accumulation again. We are going here, adding insider accumulation. It's neutral, at least on a daily chart, and now we are moving to a weekly chart. We had bearish divergence on the weekly chart with insider accumulation. You can see it here. The insider accumulation was high, the price was not so high, and here the price was higher, but insider accumulation was lower. And it declined very nicely, you can see it here. But this is it, this move have already finished. We are looking for another setup, so you don't have to pay much attention to the divergence now. What we have here is a bit more room to the downside, followed by some strength in this market. So still, timing tools give us some time to go to the downside in this market. And we can also check seasonal indicator. And what we have here is somewhat neutral, followed by a rally. And timing of this rally is the same as timing of cycles. Guys, it may be something interesting, but we have to check with commitment of trader report. I am moving here and adding net positions. Net positions, nothing really interesting. Can remove it. And now we are adding commercials index. It's also neutral. I think that it will take much more time for commitment of trader to generate any meaningful signal. But let's watch price action, and maybe in a few weeks we will find a good entry in soybean oil. Because we already have timing tools giving the same signal, but we need something else. So let's watch this market, and I am adding it to my watch list. So this is it, guys. Thank you all for watching, and I hope this video will help you to find some good opportunities in the market. If you would like to get more updates and free research, check out my blog and subscribe to daily updates. Once again, thank you all for watching, and wishing you all great and profitable week. See you.